In the forex market, you have to buy and sell currencies to make a profit in it. Normally, when we exchange our currency for another currency, we buy one currency and we automatically sell our currency. Like if you want to exchange INR for US dollars, technically what you are doing is you are selling INR and buying US dollars. So in forex, two currencies are paired with each other and currencies are always traded in pairs. For examples, Euro USD, USD JPY, etc. Now there are different currencies in the world, out of which there are 8 major currencies like US dollar, Euro, Japanese yen, British pound, Australian dollar, Canadian dollar, New Zealand dollar and the Swiss franc. These major currencies and several other currencies together form various pairs in the forex market, and they all fall in this three categories: the major, minor and the exotic. Out of these 8 currencies, the US dollar is called the reserve currency of the world, as it is the most widely used currency and almost every financial system accepts it. When the US dollar is linked with or paired with any of the 8 major currency, it is called a major currency pair. For example, Euro USD, GBP USD, USD JPY, etc. The currency pair which does not include USD in it is called a minor currency pair. Now these pairs don't have USD included but have other major currencies involved like GBP JPY, Euro JPY, etc. And the currency pairs which includes a major currency and a currency of a developing economy like South Africa or India is called as exotic currency pair. For example, USD INR, USD ZAR, etc. Now moving forward, when you first go and see a forex chart or the market watchlist section, it consists of a quote with 2 currencies, as currencies are always traded in pairs. And when you buy one currency, you automatically sell another currency. Like if you open a buy position on Euro USD, it means that you are buying euro and selling US dollars. So the first currency in the pair is called the base currency and the second currency is called the quote currency. Like in the above example, in Euro USD, euro is the base currency and USD is the quote currency. Now let us take another example. Let us say in USD JPY. In USD JPY, USD is the base currency and JPY is the quote currency. Now every currency pair has its quoted value and that is given right in front of the currency pair symbol. For example, the current quoted value of Euro USD is 1.17754. This value tells us the amount of quote currency required to equal the base currency. Like in the above example, the quoted value of Euro USD is 1.17754. This tells us that it will require around 1.17754 US dollars to equal 1 euro, which is also the exchange rate of Euro USD. Let us take another example. The current quote of USD JPY is 105.85. So what this means is it will require around 105.85 Japanese yen to equal 1 US dollars. I hope you understood everything clearly. If not, then feel free to ask me in the comments section. Thank you so much for watching this video. Make sure you like and subscribe for more forex related content.